Welcome to Portfolio Management Simulation. In this simulation, your role is to maximize your client's wealth over 3 investment years and beat market with minimum risk. As a portfolio manager in the simulation, you are tasked with taking fund allocation in different market instruments like Indian stocks, PSU, hybrid stocks, corporate bonds, and other. Once you enter the game arena, you will see different tabs, such as Reading, Forum, and Leaderboard. The first step in playing the microsimulation is to visit the Readings tab and refer to the video tutorial to understand the business and objectives. The next step is to visit the Forum, where one can interact directly with the professor using the individual option or connect with the entire course. The last tab is the Leaderboard, which will display your position at the end of every round along with a comparison with fellow participants. After each round, it is advised to keep referring to the Leaderboard and Forum to keep yourself updated with the changes in the simulation. Before diving into decision-making, it is crucial to thoroughly understand the market and different phases in tabs, as it provides essential data and information about market and instruments based on which informative fund allocation needs to be done. Begin with the food for thought, placed at the top right of each page. This segment has a set of subject-related questions that need to be answered as a part of the gameplay, providing crucial aspects to consider for decision-making, and answering all the questions is mandatory for proceeding in the simulation. The decision-making process kicks off with Market tab, where your company's history and mode of business is explained. You are also provided with information about phase, capital allocated, and different securities. Move to Phase 1 to take allocation decisions, where you are provided with market monitor detailing about each instrument's historical returns and average annualized return. In the Allocation subtab, you are also provided with market scenario that will affect your investment risk and returns. Market expected return and risk is provided along with downloadable historical data. You have correlation information of the instruments. Beta shows the fluctuation of the security compared with the market. For example, if it is 1.2, means the stock will rise or fall 20% higher than changes in the stock market. Higher than 1 indicates higher volatility, lower than 1 indicates lower volatility, and equal to 1 indicates in sync with market. Correlation shows how securities are correlated with another security. If the correlation is positive, it shows both will move in the same direction, while if it's negative, then securities will move in the opposite direction. It is necessary for diversification and risk-calculated returns. The value indicates how strongly the relation is in a positive or negative direction. In the portfolio allocation, you will decide upon the percentage of fund you plan to allocate it in different instruments, and based on allocations, cash equivalent allocation gets auto-adjusted. Once the allocation for Phase 1 is done, click on Phase 2 and move to Phase Decision area. Remember, without submitting phase decision by clicking Next Phase, you cannot allocate investments for next phase. In next phase, you are provided with risk-free rate, market return, and available capital based on your previous phase investment performance. You are also provided with new market scenario that will now affect your investment decisions. You will follow similar steps in Phase 2 and 3 as you did in Phase 1 with your investment allocation decision. In the decision checklist, you will see the allocation decision you have done for all the 3 phases. Remember, in this simulation, you cannot change allocation decision once submitted. Click on Submit to generate the report. Report will show each phase measures across different parameters. Portfolio return shows the return which your portfolio can generate at the end of the year. Portfolio risk shows the risk taken by the manager to generate the returns, which also indicates the chances of loss. Portfolio beta indicates the portfolio fluctuation compared to the global market indices. Capital shows the invested and current capital based on the returns which will be carried forward to the next level, round. Your objective in the Portfolio Management Microsimulation is to have investment return higher over the market and risk below the market average. Synopsis will provide you insights on your thinking ability on client investment allocation year on year. Review the report and synopsis before proceeding to next round. Remember, to play the next round, click on Next Round option available at the bottom left corner under Synopsis tab.